Hello everyone, welcome back to Boss Economic World. I am your host. Today is December 12, 2025. The year is coming to a close, and while you are busy planning your holiday shopping, the world's geopolitical tectonic plates are grinding against each other with a screeching metal sound that only economists can hear. Today, we are looking at a classic drama playing out in Southeast Asia. It has everything: romance, betrayal, a ticking clock, and a poison pill that could kill the patient. The patient, in this case, is the global supply chain for electric vehicles. The headline? Indonesia expects to conclude a trade agreement with the United States by the end of the year. Now, if you read the mainstream financial press, this sounds like boring bureaucratic housekeeping. Oh, how nice, Jakarta and Washington are shaking hands. But here at Boss Economic World, we don't just read the press release, we read the sweat on the negotiators' foreheads. And right now, everyone is sweating. Let's peel back the layers of this limited free trade agreement and see why this is arguably the most critical economic chess move of late 2025, involving not just the US and Indonesia, but the silent giant in the room, China. Let's look at the official story first. Coordinating Minister for Economic Affairs, Erlangga Hartarto, a man who has likely consumed more coffee in the last 48 hours than a Wall Street intern, announced at a business gathering in Jakarta this Friday that Jakarta is sending a delegation to Washington next week. The goal? To finalize a deal that was supposedly agreed upon back on July 22. Minister Hartarto had a late-night call on Thursday with U.S. Trade Representative Jamieson Greer. For those who don't follow the roster of trade hawks, Greer isn't there to hand out candy. He is a disciple of the America First trade doctrine. If he is on the phone, he is asking for concessions, not making friends. Here is the deal on the table, or at least, the version they want us to see. In July, a framework was established. 1. Indonesia's promise: eliminate tariffs on over 99% of U.S. goods entering Indonesia and remove non-tariff barriers. Basically, opening the floodgates for American corn, machinery, and software. 2. The U.S.'s generosity: in exchange, the U.S. agreed to reduce tariffs on Indonesian products from a threatened 32% down to 19%. Pause for a second. Read that again. The U.S. isn't offering zero tariffs. They are offering to lower a punitive tariff threat of 32% down to 19%. This is like a robber pointing a gun at your head and saying, "Good news. I've decided to only shoot you in the foot. Sign here, please." And yet, Jakarta is rushing to sign. Why? Because a 19% tariff wall is survivable, a 32% wall is an economic death sentence for an export-driven economy. But the plot thickens. U.S. officials are now claiming Indonesia has backtracked on its July commitments. Meanwhile, Jakarta is screaming that the U.S. is trying to compromise its sovereignty. What is the sticking point? It's not about textiles or shrimp. It is, as always in 2025, about critical minerals. According to Bloomberg News and our internal analysis, the deadlock comes down to a specific clause the U.S. wants to insert into the contract. In trade law circles, we call this the non-market economy clause, or more colloquially, the poison pill. This clause effectively says, if you sign a trade pact with a non-market economy that we deem jeopardizes U.S. interests, we have the right to scrap this entire deal immediately. This is a carbon copy of Article 32.10 from the USMCA. It is a monogamy clause. The U.S. is telling Indonesia, you can date us, but you have to delete the other guy's number. Indonesia, however, is the master of bebas active foreign policy. They want to be friends with everyone. When asked about this sticking point, Minister Hartarto gave a classic politician's answer. Those provisions don't apply to Indonesia. It's different. We'll finalize that next week. Let me translate that from diplomat to English. We are terrified of this clause, we haven't agreed to it, but we are praying we can find a loophole by next Tuesday because we are desperate. To understand why this is happening now, we have to talk about the new gold, nickel. Indonesia is the Saudi Arabia of nickel. As of late 2025, Indonesia controls roughly 55% of the global nickel supply. You literally cannot build a scalable EV industry in the West without Indonesian nickel. The United States has a problem. The Inflation Reduction Act and its 2025 successor policies offer massive tax credits for EVs, but only if the minerals are sourced from countries with a free trade agreement with the US. Indonesia doesn't have an FTA. This means Indonesian nickel is technically dirty in the eyes of the IRS. Ford, Tesla, and GM are screaming at the White House, we need access to Indonesian nickel, or we lose the EV war to BYD. So, this trade deal is an attempt to create a limited FTA regarding critical minerals. But here is the trap: who digs up the nickel in Indonesia? Who owns the smelters? The answer is China. Companies like Tsingshan and CATL have poured over $30 billion into Indonesian downstreaming since 2020. They built the infrastructure. They own the technology. The US is saying, we will give you tax credits, but you have to kick the Chinese out of the supply chain. Indonesia is saying, but they built the factory. If we kick them out, we have no industry. This is why the US claims Indonesia is backtracking. Jakarta realized that complying with strict American Foreign Entity of Concern rules would mean dismantling their most profitable industrial parks in Sulawesi and Halmahera. Let's zoom out to the big picture. Why is the US twisting the screws so hard right now? We are in December 2025. The global economy has shifted from globalization to fragmented protectionism. 1. The tariff war. The US administration has moved from targeted tariffs to blanket tariffs. The threat of a 32% tariff on Indonesian goods isn't random, it's part of a strategy to force supply chains to relocate to the Western Hemisphere. 2. The dollar wrecking ball. The US dollar index is hovering near 108. Emerging market currencies are being crushed. The Indonesian rupiah has weakened significantly this year. Jakarta needs this deal to stabilize the currency. Mordal Gunarto, an analyst at PT Bank Maybank Indonesia, said completion of the deal provides positive sentiment for foreign investors. Translation: if this deal fails, the rupiah is going to nosedive, and capital flight will accelerate. The Indonesian economy grew at 5.1% in Q3 2025, but that growth is fragile. It relies heavily on commodity exports. If the US market gets walled off by a 32% tariff, that 5% growth turns into a recession very quickly. Indonesia's objection to the US demands is framed as protecting their independence. They claim the deal risks their relations with China and Russia. Let's look at the data. Trade with China. China is Indonesia's largest trading partner. Two-way trade exceeds $130 billion. Trade with US, roughly $45 billion, but, and this is key, Indonesia runs a massive trade surplus with the US. The US buys Indonesia's finished goods. China buys Indonesia's raw materials and sells them machinery. If Indonesia signs the poison pill, Beijing has threatened to restrict investment in the next phase of Indonesia's industrialization, EV battery manufacturing. If Indonesia refuses the poison pill, the US hits them with tariffs and locks them out of the American EV market. Jakarta is trying to bluff. Hartarto says, we'll finalize it next week, implying a compromise is close. But looking at USTR Greer's track record, the US is unlikely to blink. The US strategy in late 2025 is, we are the consumer of last resort. You play by our rules, or you sell to someone else. So, will they sign a deal by December 31, 2025? Here is my analysis. Scenario A, the watered-down deal. They sign a critical minerals agreement that is very vague. It allows Indonesian nickel into the US, but introduces a verification mechanism that kicks the can down the road. The US gets to claim victory for its auto industry, Indonesia keeps its Chinese investors for now. Probability, 40%. Scenario B, Indonesia capitulates. The threat of 32% tariffs on textiles and footwear is too scary. Jakarta signs the poison pill but creates shell companies to hide Chinese ownership in the nickel sector. This is the Vietnam model of laundering trade. Probability, 35%. Scenario C, the deal collapses. USTR Greer refuses to budge. The US imposes the tariffs. Indonesia pivots harder toward BRICS. This would be a disaster for US automakers like Tesla, driving up battery costs by 20 to 30%. Probability, 25%. Hartarto's comment, it's different. We'll finalize that next week, suggests scenario A or B. He is selling confidence to the market because he has to. Ladies and gentlemen, what we are watching is not free trade. Free trade is dead. What we are watching is managed trade based on geopolitical loyalty. But positive sentiment that Bank Maybank refers to is simply the market's relief that the US isn't detonating a bomb in the Indonesian economy just yet. For the general public, this matters because it determines the price of your next car and the stability of your investment portfolio in emerging markets. For the finance professionals watching, keep an eye on the IDR/USD pair next week. If the delegation comes back from Washington with long faces, short the rupiah. If they come back with a piece of paper, check the fine print on rules of origin. The US wants the nickel, but it hates the miner. Indonesia wants the marriage, but doesn't want to sign the prenup. And China is the ex-boyfriend sitting in the front row of the wedding, holding the deed to the house. We will see who blinks next week. I'm your host. This is Boss Economic World. See you next time.